Hello again, everyone. This is Joe Hentges with Beyond the Chart. In this technical analysis of the stock market video, we're going to take a look at the Dow Industrials, one of my key indicators, the short-term trading index, three key ETFs, semiconductors, home builders, and financials, and then one stock from each one of those sectors. So stay tuned. Okay, so I titled this video that there's a correction underway is the term that I use, and in reality the correction's been underway for 3.5 weeks. It, in my mind, is being confirmed by the moving average cross. Now that happened back here in early January also, but that was in the middle of a sideways correction and went on for about a month and a half. Now, this, I think, is going to be a bigger, deeper, or more complex correction, kind of on the magnitude of wave 2, because I believe that we have 5 waves up, completing minor wave 3. So now that we've had 1, 2, 3, I'm expecting 4. 4 should be on the magnitude of 2. So this, just down here, let's take a quick look at what kind of correction 2 gave us. It corrected a little bit over 38%, let's call it 40% of wave 1. Okay, it's not a deep correction. This got a little complex in my mind. And so what is the current one doing? Let's say of wave 3. If we look at the minor wave 3, a 23.6% correction would just come down here to 20,200, about 400 points below where we closed on Friday, and a 38% would bring you down to more like 19.6. A 50% would bring you down to 19.1. So this has got the room to come down, and actually a wave 4 can come as deep as it wants to go, as long as it doesn't overlap the top of wave 1. That's the only Elliott wave rule that we actually have. But if it breaks out of this channel, I'm going to start to wonder whether something else is really going on. So my target in my mind is a pullback into this previous 4th wave area, which is right here about 19.6 to 2000. And that would put it, depending on how long or how fast it does that, it'll put it down here in this neighborhood at the bottom part of this channel that I've got. Let's take a look at the weekly chart real quick. Same type of thing that I drew in terms of a channel here. Notice we haven't even broken below the 10-week moving average yet, but we are looking for this to break down a little bit further. Now, this move this last week, just so you note, that this move down almost 318 points is the biggest weekly point drop in the Dow since the week ending September 9th, all the way over here. It's bigger than the one right here before the election. So all of this quote-unquote Trump rally, this is the biggest move down since the week ending September 9th. So, some damage was done this last week. When I looked at all the sectors, I had 15 sectors on an ETF dashboard that I share with my insider members. 13 out of 15 were down, and one of those that was up was basically up like 0.15%. So almost everything was down except utilities. That was it. All right, let's take a look at the short-term trading index. The close Friday 1.16. The 10-day keeps creeping on up here, watching to see if it gets above 1.5 on the 10-day, the blue line here. Then that starts to put me into short-term bottom alert because we're getting at an extreme. There's also some other things I look at, and but that's the key thing to watch. And I'm watching for clustering above 2.0 on the trading index. We haven't had that kind of thing in a long time. Sure, the semiconductors continues to trend higher as it's been doing for weeks and weeks and weeks. But a little doji candle this week and up 0.12, so hardly any movement, but it wasn't down with the market this week, which is interesting. We are at the top of a long-term channel, and let me see if I can zoom in on this. And this channel is the low of 2011 and February 2016. I made a parallel line from the high of February 2011, and that's where we're at. Okay, now this line was drawn before we got to this point. I've had this line drawn for quite a while now. So it's interesting that we are right up and just kind of touched it this last week. Let's take a look at the Skyworks Solutions. This has been trending very solidly to the upside. It really hasn't rolled over and broken down yet, but all of my indicators that I look at are showing bearish divergence with this move and this move here. But you got to let price break down, and the way the stock market's been moving, I want to see the moving averages cross at a minimum. You can see how it kind of, once it started to do that, it corrected sideways with what, partly it started actually before the market did, and then broke out of that in early mid-January. So nicely trending to the upside, but I'm a little wary in watching to see if it's going to start rolling over. Let's take a look at the Homebuilders ETF. The Homebuilders is trending up very nicely also, not even close on the weekly chart to the 10-week moving average. This was just down 67 cents for the week, not even close to the high, all-time high, but has been trending over the last couple of months, just been trending up very nicely. Let's take a look at Home Depot. Home Depot is kind of mirroring this. This is a daily chart. That was a weekly chart. This is a daily chart. Now this is acting a little bit like what we just saw Skyworks in terms of the move down below the 10-day and getting close in here. This could roll over at any moment and start to do like what it did over here. But you got to watch and get some, what do you want to call it? A continuation or confirmation of the move, I guess is what I'm thinking about it. Is, after it breaks down, you got to get that it's going to continue to trend in that way and confirm that that's what's happening. Yeah, we really didn't get that in here. You got a little bit of a moving average break and then it continued to push to the upside. All right, so Home Depot, let me see. I think it's doing the same thing in terms of getting bearish confirmation here on the indicators. You can see the RSI in here is not confirming the move to the upside. So I think this is suspect for rolling over also. And especially if the market continues to do what I'm looking for it to do, Home Depot is going to correct. All right, the last sector is the financials. And this one, I believe, has also put in, just like the market, just like the Dow, it's put in 3 minor waves up and we've corrected down. Now, this is interesting in that this move this last week was pretty strong. It's already back into the middle of the previous 4th wave. So we'll see, watch and see how much further does it go, and does it stay within the channel or does it break down even further? So that's what I'm on alert for here with the financials. And really, when you look at one of them within that, JPMorgan, which is also a Dow stock, it's literally just doing the same thing. It's right back into that previous 4th wave area. Consolidation right in the middle of it is where it got support on Wednesday, and still in the channel, hasn't broken down out of it. So we're watching it. But again, I believe we're in a 4th wave, and it's just a matter of what kind of pattern is it going to get. Now, JPMorgan here just did a simple zigzag. So this could become more complex. This could become a flat, which is like a 3-wave A, then you pull back to the beginning of A, then you sell off again, or it could become a triangle. There's a lot of different patterns that this could form, so we just have to continue to monitor it on a daily, weekly basis. Okay, well, that's it for the weekend. If you felt like this video was helpful, hit the like button, and if you're not watching this on my website, head on over to the website. And this is the website, so you know that joehentges.net is what it looks like. Now, if you hit the blog page here, you will see. Let me hit the blog page. I put this up here in terms of this last week's trade ideas that are introduced on Sunday to the members, like I do every Sunday. So a little bit of an update and status on that. All right, so that's the latest there. Everyone have a great weekend. We'll talk to you on the next video.